Is with us. He's our market master of the day, Chief Executive Officer at Avendus Public Markets, Alternate Strategies. Andrew, great to have you with us here. Thank you very much. It's the end of the year, so volumes, of course, will be thin. But given as they are, what is your sense, Andrew? What did you make of the selling last 2 days? To your mind, was there one dominating driver? And what next, near term?
I'm not sure there was one dominating driver, Prashant, apart from obviously, there's still there's some great gains to be taken off the table, in some of the sectors, say PSU banks, it performed so well. It's always there for taking some money off the table. So I'm not overly kind of concerned that the market had this sell-off. It's kind of in line with what's been happening globally, so it's not out of context with anything that's out there. Maybe the severity was a little bit more than people expected, but here we are again looking into 2023, and we are kind of the same dilemma as we came into this year. Is the market right? Is the Fed right? If you remember last year, coming into 2022, market was fighting the Fed about whether inflation was transitory, and going into 2023, we're fighting the Fed of whether interest rates need to be kind of hiked up a lot more, and when will actually they go on pause. So that's going to keep the market, I think, in January, still occupied and volatile. In terms of, we've seen over the past month, right, we've gone from kind of the Goldilocks scenario to a recession again, and the figures are still not supportive of the Fed, reducing so quickly. So I think that's what's going to, keep the markets the volatility of the markets kind of quite high, at least in January. And of course, for India, we have our budget coming up in February. So again, there might be some, kind of volatility around that in terms of what the finance minister may or may not do.
I guess, Andrew, hi, morning, and happy New Year to you and your team in advance. I guess these are the best times to be accumulating, right? When the markets are volatile or when the markets are under pressure. What would you do with some of the key pockets like IT? What side of the fence are you on? Because we do have IT earnings coming up in a fortnight as well.
See, I think the sentiment towards IT will be obviously continue to be driven by what's happening in tech in the US, and the correlations remain very high, and it's been throughout most of this year. So unless you have a very positive view on tech, and I think that can only be that you expect interest rates to fall sometime in 2023 globally, for that sector to start seeing some relief, because it's all focused on cash flows. And for a lot of these tech companies, they've been found out to the fact that valuations are high, but profitability and cash flow wasn't there. So I think that will continue to be a theme that kind of haunts the sector in the very short term. So whilst I'm not saying that our IT companies are doing very badly, but I just think the sentiment remains against them in the very short term. I don't think valuations are quite there yet that it's compelling to be buying them. I think there's other themes that will play out throughout 2023, which will be much more exciting.
Andrew, I think your lack of concern over the markets declining is something that the street has caught on to right now, because now we are gaining a fair amount of ground from the morning lows. In fact, the Nifty is up almost 100 points from the lows we hit this morning, closing in on that 17,900 mark as well. And the mid-cap index, which had a rather volatile first 15 minutes of trade, or rather first few minutes of trade, has now picked up further steam. The advance decline firmly in the ratio of advances. 3 stocks advancing for just 1 declining. Advance decline, 2,100 stocks in the green for just around 650 in the red. There you have it. The lines, now far apart, with the green one much above the red one right now. As we speak, bunch of stocks doing well. HDFC Bank at the high point of trade. Britannia, which was Mitesh's 9-10 call, has moved to the high point of trade as well. HDFC Limited too has done extremely well, and the PSU pack is picking up. We have Union Bank, which is up almost 6.5%. PNB is up around 3% as well, and a bunch of the other stocks doing well. Andrew, the last time you joined us, we were sitting at a fair amount of weakness for all these platform stocks, Nykaa, Zomato, Paytm, etc. You said that after the sell-off that you saw in them, maybe valuations were interesting and you liked those ideas then. Since then, not much has moved in terms of prices. Are you any wiser now, and would you look at accumulating any of them now that they've corrected and the flows fear is out of the system?
I think there's still a little bit more time before putting money to work there. I think there's still concerns over cash flows and the margins of each of those businesses. So I think another quarter of these companies starting to deliver, I think would be something that the market would like to see, and ourselves as well. So the work continues. It's not going to be a quick kind of analysis. It's going to be an analysis which takes time, because a lot of these companies, in terms of getting to profitability, is still in question, and I think that's what you've got to be assured about, that's a working kind of a work in progress for the managements of these companies. So I'm not saying that it's not the right time to kind of bottom fish at the moment, but I just think you need to have a little bit more kind of results behind you which are showing this progression. Even if you miss the first few percent of a rise, but you're getting it right for the long term, that's where I think I'd be looking for our investments at the moment. So no need to rush. There's plenty of time. These companies are not going away from us.
Okay. Two spaces that the market has been increasingly bullish on. One is capital goods and the other one is defense. Of course, defense has played out in a big way this year as well. But your thoughts on whether these could continue to be outperformers in the year to come?
Yeah, I mean, it's been one of our long-standing themes, throughout this year, in that there's a global theme that's playing out. One is renewables and one is defence, and that's going to continue into 2023. So that's a space which you just need to kind of continue to invest in. I think in terms of capital goods, and again we spoke about this, in terms of, yes, you'll get the usual roads, bridges, and highways being built, but I think because of the capital expenditure, capex cycle, which we expect globally, it's going to be more towards those industries where there's a security supply problem in the past or potentially in the future, and therefore it's going to be the different capex cycle than we've seen before. So it's going to suit the kind of the Siemens, the ABBs, and so on. It's not going to be traditional L&Ts, BHELs, which I think will be leading the capex cycle this time around. So I would look more kind of directly towards those which are going to benefit from new industries and manufacturing facilities being built, but not in the traditional way of previously.
Towards the end of the year, we typically see a lot of these holiday/travel/enjoyment stocks do extremely well. Although last week they were under pressure on account of fears of what's taking place in China. Now they seem to have bounced back a tad. We have Ease My Trip, which is up 7% odd. Indian Hotels is bouncing back from the lows as well. A lot of these hotel stocks are doing well. Delta Corp, which was an underperformer last week, has now moved to the high point of this morning. Andrew, you have any preferences here in any of these unlock/enjoying/travel and leisure themes?
Yeah, Mangala, I'm not sure about the enjoyment of the prices we're paying for some of these trips, but I do feel that, again, if travel restrictions, I'm not saying that they're kind of coming back anywhere, but if people are just worried about travelling again in the very short term, then it only lends itself, to stay in India and travel in India. So I think this is a theme that's not going away, and the capacity utilization in these hotels is fantastic, and you go anywhere, it's difficult to get tables. So I don't see this. I see that the fact that COVID for 2 years stopped us doing a lot of things. I think we'll continue to want to enjoy what we've been doing and have more experiences in our travel, and I think that's going to be the big theme. And if the hotel industry can capture some of this, and the travel companies themselves, then I think we'll continue to see very, very strong growth in the industry.
Yeah, like someone was saying, right, 90% of travel these days is just waiting for your table, waiting for your reservation, waiting for your flight to take off. So there's not too much fun in that. But nevertheless, have a great 2023. And until we speak and meet again, Andrew, thanks a lot for speaking to CNBC-TV18.
Thank you, and wish you and the team and your viewers a very happy and prosperous 2023.
Thank you so much. Thanks for joining in.
Look at the market, right? 100 points now. So 17,900 plus is what we have.